All right, good evening, everyone. This is Joe Henches with Beyond the Chart, and today is Tuesday, March 11th, 2014, and this is a technical analysis of the stock market today. Slow roll. That's what I'm calling this. It looks like it's trying to do a slow roll over, but got to let the market show us, and some of the stocks are starting to do that. We'll see if we can get follow through on this, and we'll look at some of these indices, but just kind of has that feeling like it's trying to roll over. So we'll see. The Dow again is not near new highs. Came down to the 10-day exponential moving average and bounced right off of it. You can just see it right in here. The low for the day was 16,325, at least the theoretical low. 16,325, and the moving average is 16,328. So it's right in there. So still continuing to push up, but again, as I mentioned, it looks like it's, the volume is way down below the 50-day moving average of the volume. When you look at some of these indicators in here, you still have DI, the blue line, DI plus greater than DI minus. The RSI is kind of in the middle. We're not really seeing it break below the 50 yet. Now, if we get a close down below, then the DI is up here in positive territory. We get a close down below this 10-day, 10 EMA, I'm going to call it, and that could all start to change. Look at the S&P 500. Very similar to the Dow today. I mean, we had this handful of dojis back in here. And then we get the sell-off today, bounce again right off the 10-day exponential moving average. No other real sign that we're seeing in here. I think there was anything else I was going to mention about that. The NASDAQ. Now the NASDAQ, for the first time in quite a while, was the weakest today of any of the indices. Okay, look, it's closing below the 10 EMA. All right, so now I've written a number, 42.52. To me, if it hits 42.52 tomorrow, I'm thinking we're in for a down leg, and that this is going to start to push to the downside. I just counting on just a close below. Sometimes it'll close below, and then it bounces right back up, close below, bounces right back up. It's when it gets the close below and then gets some follow through that you then get, the downward movement. So that's what I'm going to be watching for tomorrow. We've had plenty of divergences that are showing up on all three of these key indicators on the NASDAQ. So it looks to me that this thing is getting ready to roll over. And when you look at the New York Composite, that's another one that closed right below the 10 EMA. Okay, first time, here it closed right at it. First time it's closed below the 10 EMA since back here down at the bottom on February 6th. And last time it did it just like the NASDAQ, kind of closed below, bounced up, closed below, and then went down, sold off. I'll show you something else here in just a minute that makes me think that maybe something is coming. But the number I'm looking for here is 10,303 on the New York Composite, which is right down in here. Then that will have given some follow through, and that could be a sign that we're in for a down move. Okay, let's take a look. Short-term trading index. This is kind of pulled back up on the 10 EMA in here. So I'm not really getting an extreme signal that I would be looking for, like in here below the red line, here and here. So I'm not seeing that on the short-term trading index. The volatility index looks like it did a little bit of a reversal type candle in here, closing near the high for the day today. But, that's acting along with the market. Okay, the Dow and the market sold off, so the VIX's fear index is rising a little bit. So we'll see if we start to get any follow through off of that. Now the other one I think is kind of interesting is the high-low index. Now we're right in here in the middle. We've dropped down, but the thing that's interesting to me is the 10 EMA and the gray line here, the blue-gray line, which is the 21-day moving average. It's right there. It hasn't broken through it. The 10 hasn't broken below the 21 yet. It's almost right at it. But I've noticed that in past, when it did break it, it was like a little bit of a prelude to the turn. Okay, like right in here, right in here. This was what, January 14th, mid-January, right before the major sell-off. And you got a little bit of a break here in early December, but the real one happened back here in early November. We got one in early October. There were different times, depending on the degree, where, you know, July, right here in mid-July, remember the peak of the market was August 1st. And this is July 26th, getting the blue breaking below the 21, the 10 below 21. Back here in May, May 23rd, and then the market sold off into low June. So watching this closely to see if we start to get a little bit of a breakdown. And of course, that's going to probably start to come if the market starts to sell off. Okay, those are the three I wanted to take a look at. I wanted to take a look at three stocks. Pandora, which I'd mentioned this weekend as a trade idea. Pandora hit our target, our initial target on it today. So and I'm theoretically putting two option positions out there. When you're putting on the trade, depending on the capital you've got to play with, you can decide how many you want to use for yourself. I'm using this as an example to show what can happen. And so I'm selling half the position. The profit is shown on the web page, $115 profit on the option, and retaining the second one to see if we can get some continued down move in Pandora. Now, it's broken this trend line from the first of the year, okay? It's right at the 50-day, 55-day moving average. You've got this gap down here that's begging to be filled, and it looks like there's potential support down into this area. That's why I've got the dotted line. It just so happens to correspond to, or coincide is the word I'm looking for, happens to coincide with the bottom of the gap. So that's kind of interesting. And I think this on Sunday I showed you the different, you know, very negative bearish divergence that we were getting in here on these indicators on Pandora. I mean, it's very hard for me, and I see some of these people, you know, raving bullish. You know, maybe they're really, really long term, but short term, I don't see how you can be real bullish on it. Okay, and then the other one I wanted to look at, two new trade. Well, the one trade idea that I posted on the website last night for today, but it didn't get filled today, is on F5 networks. Okay, so we've got a sell target at 110.38. It never got there today, and because we've continued to close below the 10-day, the 10 EMA, I am keeping that same target. And if it hits that target, looks like it's gonna be breaking this trend line. And this is another one where we're getting some pretty good divergence showing up. You know, this thing is pushed on up in here, but the indicators have not gone with price. Okay, let me look at this on the DI demand index. Okay, so pretty negative, and the volume has really dropped off in this move up into here. So this is not too attractive, and that's why I'm looking for a fill to buy puts at 110.38, and I've got the specifics on the Trade Ideas webpage. And the last one for tonight, MGM, is a new one I want to mention. Same type of thing, getting a bearish divergence. So looking to sell at 26.62, slightly below here, just right down in here. And so, I mean, you can see the divergence that's showing up. You know, the price moves to new high, the indicators do not move to new high, and then you start to get to close below the 10 EMA, and it has the potential to start rolling over. Okay. So that's what we're looking at. We'll see if we can get an entry on that tomorrow, and we'll go from there. I think that's it for tonight. So we'll see what, I'm not sure, I didn't look at the economic calendar, so I can't remember what we've got on tap for tomorrow. If there's anything big or not, we'll have to just glance at that first thing in the morning. But that's about it. We'll talk to you again tomorrow night. Have a great Wednesday. This has been Joe for Beyond the Chart. Thanks for stopping by.